U.S. consumer price inflation has declined from 9% in June to 7.76% for October. How much of this welcome decline is due to the Federal Reserve raising rates? Not as much as you might think. Inflation surged in 2021 and into 2022 because the pandemic shifted spending away from services and toward goods, causing excess demand and supply chain issues. And then there was the massive fiscal stimulus to keep spending at high levels. These causes are in reverse. Spending is now shifting back to services, easing demand for goods. Supply chain disruptions are not fully resolved, but great progress has been made. Emergency fiscal stimulus has ended. Most of the inflation decline is due to the removal of the causes. Fed actions have helped a little too. Higher rates are reflected in lower prices where borrowed money is key, especially for durable goods like autos as well as housing. The impact from Fed actions will get most of the credit for further declines in inflation as policy works with a lag.